Welcome to Smart Dollar Mindset, the channel dedicated to helping you achieve financial freedom through smart money habits and investing. In today's video, we're going to dive deep into a topic that could completely change your financial future: how to create an income-generating portfolio. Most people think of investing as a way to build wealth only for the future, like saving for retirement, but they often overlook one of the most powerful strategies in personal finance: building a portfolio that generates income for you while you sleep. Imagine having a stream of money coming in every month without clocking in for extra hours, without side hustles, without the stress of working overtime. That's the beauty of an income-generating portfolio. It allows your money to work for you rather than the other way around. We'll go step by step, starting from the mindset shift you need to make, all the way to the different asset classes that generate cash flow, and finally how to put it all together into a portfolio that matches your goals and risk tolerance. Along the way, I'll share real-life examples of how regular people have built portfolios that provide them with consistent income, and I'll also highlight some common mistakes to avoid so you don't fall into the same traps. By the end of this video, you'll have a blueprint for creating your own income-generating portfolio and a new perspective on how financial independence can be achieved. The first step to creating an income-generating portfolio is understanding the purpose behind it. Too many people approach investing with only one thought: growth. They want their portfolio to grow as big as possible, as fast as possible. While growth is important, it doesn't necessarily translate to freedom if you can't use that wealth to support your lifestyle. An income-generating portfolio focuses on balance. It's designed not just for growth, but for consistent cash flow. The goal isn't simply to accumulate assets but to accumulate assets that pay you back regularly. Think of it like owning a golden goose that lays eggs month after month. The goose itself is the asset, and the eggs are the income. You want to keep the goose healthy while enjoying the steady stream of eggs. This mindset is a major shift from the way most people are taught to think about money. Instead of asking, "How much is my portfolio worth?" you start asking, "How much is my portfolio paying me every month?" That's the true measure of financial independence. Now, let's talk about the foundation of income-generating portfolios: dividend-paying stocks. Dividends are one of the most straightforward ways to turn investments into cash flow. Companies that pay dividends share a portion of their profits with shareholders on a regular basis, often quarterly. These payments can be reinvested to grow your portfolio or taken as cash to support your lifestyle. For example, let's say you own shares of a company like Coca-Cola. For decades, Coca-Cola has consistently paid dividends to its shareholders. If you own 1,000 shares and the company pays $1.84 per share annually, that's $1,840 a year in passive income. And that's just from one stock. But the real power comes from diversification. Instead of relying on one or two companies, you can build a basket of dividend-paying stocks across different industries: healthcare, consumer goods, utilities, and more. This way, your income is stable even if one sector faces challenges. Take the case of an investor named Mark. In his early 30s, Mark decided to invest $500 every month into a mix of dividend-paying stocks and reinvest the dividends. 20 years later, his portfolio not only grew into the hundreds of thousands, but it also paid him enough dividends to cover his mortgage. That's the power of dividends: growth and income working together. Another crucial element of income-generating portfolios is real estate. Real estate is one of the oldest and most reliable ways to generate income. When you own rental property, your tenants effectively pay down your mortgage while you collect monthly rental income. Over time, the property also appreciates in value, creating a dual benefit of income and growth. For instance, imagine you purchase a duplex for $250,000 with a 20% down payment. After accounting for expenses like mortgage, taxes, insurance, and maintenance, you're left with $500 a month in positive cash flow. That's $6,000 a year, and as rents rise over time, that income grows while your mortgage payment stays fixed. Now, not everyone wants the responsibility of managing tenants and fixing leaky toilets, and that's where real estate investment trusts, or REITs, come in. REITs allow you to invest in real estate through the stock market. They own and manage properties like apartments, shopping centers, and office buildings, and they are required by law to pay out most of their income as dividends. This makes them an excellent option for investors who want real estate income without the headaches of property management. A real-life example is Susan, a retiree who didn't want the hassle of managing rentals. She put a portion of her portfolio into REITs specializing in healthcare facilities. Now, she receives consistent quarterly dividends, which she uses to cover her living expenses. Bonds are another cornerstone of income-generating portfolios. While they may not be as exciting as stocks or real estate, they provide stability and reliable interest payments. When you buy a bond, you're essentially lending money to a government or corporation in exchange for regular interest payments. For example, if you purchase a $10,000 bond with a 5% annual interest rate, you'll receive $500 every year until the bond matures, at which point you also get your initial $10,000 back. Bonds are particularly valuable for reducing risk and providing steady income, especially for those who want to avoid the volatility of the stock market. Consider a portfolio that mixes dividend stocks, REITs, and bonds. The stocks provide growth and rising dividends, the REITs provide high dividend yields from real estate, and the bonds provide stability and predictable income. This balanced approach creates a portfolio that generates income while also growing over time. Another modern way to generate income is through peer-to-peer lending platforms and private lending opportunities. With peer-to-peer lending, you can lend money directly to individuals or small businesses through online platforms, earning interest as they repay. While riskier than traditional bonds, these opportunities can provide higher yields if chosen wisely. Then there's business ownership, either directly or through stocks. Owning part of a profitable business means you share in its success. Many people underestimate how much even small-scale business ventures can add to an income-generating portfolio. For example, John started a small e-commerce business alongside his job. Within 3 years, the business was producing $2,000 a month in profits, which he funneled into dividend-paying ETFs and bonds. Over time, he built a portfolio that not only grew in value but also spun off consistent income. One of the most important steps in creating an income-generating portfolio is reinvesting your earnings in the early stages. This is how you build momentum. When you receive dividends, rental income, or bond interest, reinvesting instead of spending accelerates compounding. Over time, your portfolio grows much faster, and eventually, you can choose to take the income as cash flow without sacrificing long-term growth. For instance, if you invest $1,000 in a dividend-paying stock yielding 5%, you'll earn $50 in dividends the first year. If you reinvest those dividends, the next year you'll earn dividends not only on your original $1,000 but also on the $50 you reinvested. It seems small at first, but over decades, this snowball effect becomes massive. Of course, building an income-generating portfolio isn't just about what you buy, it's about avoiding mistakes. One common mistake is chasing high yields without considering sustainability. A stock paying a 12% dividend might sound tempting, but if the company can't sustain those payouts, you could end up losing both income and principal. Another mistake is lack of diversification. Relying solely on one type of asset, like only buying tech stocks or only buying rental properties, exposes you to unnecessary risk. A well-rounded income-generating portfolio spreads risk across asset classes, industries, and even geographic regions. There's also the risk of neglecting growth in pursuit of income. Some investors focus so heavily on income that they ignore the importance of long-term growth. Without growth, inflation will erode your income over time. The best portfolios strike a balance between generating current income and ensuring future growth. Final thoughts. Creating an income-generating portfolio is one of the most powerful steps you can take toward financial independence. It transforms your money from something you constantly work for into something that constantly works for you. Instead of worrying about every paycheck, you start building streams of cash flow that support your lifestyle and give you freedom of choice. The beauty of this approach is that it doesn't require extreme wealth to get started. You can begin with small amounts, consistently invest, and watch the income grow over time. The key is to focus on quality assets, diversify your holdings, reinvest your earnings in the beginning, and maintain patience. Over time, the income snowball builds, and what once seemed impossible becomes your reality. Imagine waking up and knowing your portfolio is covering your mortgage, your groceries, or even your entire living expenses. That's not a dream reserved for the ultra-wealthy. That's something everyday people can achieve by making intentional choices and sticking to a plan. But remember, this journey is not about quick wins or overnight success. It's about consistency, discipline, and vision. It's about resisting the urge to spend every raise and instead directing that extra money into assets that pay you. It's about understanding the difference between liabilities that drain your wealth and assets that grow it. And it's about shifting your mindset from working harder to letting your money work harder for you. If you take anything from this video, let it be this: every dollar you earn is an opportunity to either build your future or delay it. Choose wisely. Build assets. Focus on cash flow. And never underestimate the power of patience and compounding. Thank you for watching Smart Dollar Mindset. If you found this video valuable, subscribe to the channel, like the video, and share it with someone who needs to hear this message. This channel is here to help you create wealth, break free from financial stress, and achieve lasting financial freedom with smart money habits and investing. Stay tuned, because the journey to financial independence is just getting started.